Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's a day which will start off negatively, of course. The key news first. Let's get to them. So, Antony Blinken says that US President Joe Biden, is ready to engage with Vladimir Putin. So that's one statement which is positive in amidst all the other statements that they have given, wherein they're saying that Russia is ready for a war and it will happen anytime soon. And they will attack different cities of Russia and not just Kyiv. French President Emmanuel Macron and Russian President Putin have agreed to trilateral talks on Monday. Oil climbed on escalating Ukraine tensions as well as the impasse on Iran talks, though there is hope that the nuclear deal with Iran, whenever hopefully it gets done, from a crude perspective, and that will help in crude supply and therefore prices. And in amongst other things, Australia will welcome international tourists starting Monday. The reason I bring this up is just to show that the world is now starting to accept to live with the pandemic, which is probably a good sign. Leave Hong Kong out, leave Chinese cities out. The rest of the world seems to be starting to live with the pandemic. But the big pressure remains what will happen between Russia and Ukraine. And to add to some more news, the Indian embassy in Ukraine has issued the advisory for nationals amidst these tensions. They say that all Indian nationals whose stay is not deemed essential in Ukraine and all Indian students are advised to leave Ukraine temporarily. Available commercial flights and charter flights may be available for travel. This clearly shows that everybody's feeling the heat when it comes to Ukraine. What does all of this do for the markets? Well, the US markets were down on all of this news in Friday. While they're shut today, the fact that they were down and the stress remains has meant that some of the other markets will show some pressure today. Mind you, on a lot of technical gauges as well, irrespective of what's happening to Russia, Ukraine, the Nasdaq 100, for example, which is in a bit of a corrective mood because of what's happening to the rates. There are some very interesting data points out here. If you see this chart, only 18% of the members are above the 50-day moving average and just 35% above the 200-day moving average, which means a large portion of the Nasdaq 100 members are actually below key moving averages, and therefore, if they have to gain back, then they have fairly high number of resistances to climb, which typically in a slightly trending market or a sideways market with a downward bias is not that easy. So I thought this chart was pertinent, and therefore we really loved the data in this chart, and therefore we brought it to you today. But Asia and SGX Nifty both indicating that the start will be lower. The SGX Nifty was probably down 100 odd points. Most Asian markets, keep in mind, US markets are not functioning today, but most Asian markets, the SGX Nifty all indicating a start in the red. So shouldn't surprise anybody. This is the SGX Nifty and shouldn't surprise, about 100 odd points. So in light of all of this, what is the trade setup? So the key level to monitor for the Nifty, I reckon, is last week's low of somewhere around that 16,850 mark. If we break that, then large downsides open up, as per, I think, most notes that I read over the weekend on the technical side. But I do believe that tactical, high-risk, long opportunities stay in the period of uncertainty. Somehow for the last 2 or 3 days, I do believe the risk-reward might be, if things smoothen out, might be in favor of people who go long as opposed to go short. But clearly, the geopolitics is playing the other side, and therefore, let's wait and watch what happens. But I think in select pockets, oil sensitives, for example, some key long only opportunities might exist, but otherwise it's just difficult to call. There's so much noise, viewers, in the current period that, frankly, if you're not a very expert trader, if you don't look at the screen almost every single minute, so to say, it might be better to actually stay away from the screen and not trade in this period of uncertainty. FIs continued to sell 2,529 crores worth of selling. DI has bought about 1929, but the FI flows is pretty large. Now, stocks to watch today, it's a slightly longer list, even on a day like this, I might add. But let me bring to you some of them. So TCS, the last day to qualify for the buyback record date of Feb 23rd is today. Keep in mind the TCS buyback price is 4,500. Now, the only thing to keep in mind, viewers, here is that the acceptance ratio need not be 100%. It could be 50%, it could be 75%, it could be 100%, whatever. And therefore, if you are not inherently constructive on IT, don't buy it necessarily for the buyback, because as I said, the acceptance ratio might not be. But in a period of so much of uncertainty, if a lot of people are in that sub 2 lakh retail investor bracket and wanting to tender in the shares, then the acceptance issue obviously comes off. But in this period of uncertainty, that kind of return is actually not bad return. So pick and choose. Mind you, you won't know the exact nature of what the buyback amount or the buyback percentage is going to be. So be mindful of that. But 37.93 currently for TCS, the buyback price at 4,500. Ambuja came out with numbers, as we all know. I thought the city note on Ambuja was interesting. They have downgraded the stock to neutral with the target price cut to 365 rupees from 435. I think the rationale is interesting. They are saying that with Ambuja's newly announced capex, East India should account for 35% of capacity, taking away the geographic advantage versus ACC. And at an EV per ton of $140, they prefer ACC, which is trading at 110 EV per ton of 110, which is pretty stark in terms of a differentiation. So I think this is the principal reason why cities downgraded the stock to a neutral. May react. Watch out for this. Some mid caps in news include a Gulf Oil Lubricants, which will buy back about 2.8% of equity at a buyback price of 600 per share. Godavari Power and Ispat, which has gotten into agreement to sell 50 megawatts of solar thermal power plant for 665 crore rupees. Hinduja Global, which has won a $281 million UK test and trace contract. Remember, the stock was down because they bought a related party company at some valuations which were maybe questionable, but just that they entered into a related party transaction. The stock was down in Friday's session because of that. This is some good news for them, but let's see if the stock reacts. Just the fact, the whole way they've gone about doing the thing, to a lot of investors, it's left a bitter taste in their mouth. I'm no one to comment on whether they have really done the best practice or not. I'm presuming that they would have tried to follow the best practices, but yeah, some of the things haven't been particularly great from HGH's side. So I don't know what kind of a difference would this $281 million UK test and trace contract mean. It's a large one, but let's wait and watch. Crest Ventures is interesting. It's a very illiquid stock, so please be careful if you're trading this. And it's gained a little bit in the last few days, so that's the other thing you ought to be mindful of. But Phoenix Mills is going to pay the company 918 crores for buying the stake in a particular company which has got the rights to the Chennai Phoenix Mall. So Crest Ventures and a subsidiary own 50%. For that 50%, they are getting paid 918 crores. The reason why this is important is because for Crest Ventures, the current market cap is just 497 crores. So they are receiving virtually 180% of the market cap as cash. Now, depends on what they do with the cash, of course. These days, you never know. But yeah, if the company engages in a buyback, which is healthy priced and stuff like that, or a dividend, then it could be interesting. But yeah, could react positively today. Watch out for this one. JMC Projects is the other one. They're going to merge into Kalpataru Power Transmission in an all-equity merger. Shareholders of JMC shall be issued equity shares of Kalpataru in the ratio of 4:1. So frankly, I did the math. There's no arbitrage here. It becomes a larger company, and therefore, in that sense, could it be considered positive? Who knows? But yeah, just watch out. I mean, no arbitrage. So don't go out buying from an arbitrage perspective. Some promoter buying seen in a few stocks. So RT Drugs, wherein promoter and director Prakash Moreshwar Patil bought about 8,600 shares. Global Spirits, wherein promoter group Rambagh Facility bought about 19,200 shares. And Star Cement, wherein we've consistently seen Sajan Bhajanka buying some shares. On Feb 17, there was some 39,000 shares that he bought. So some entities in which promoters have seen some buying. Last stock-specific piece is on NTPC. CLSA came out with a note on green hydrogen and how it set the ball rolling. And they have a view on NTPC on that. They are saying it's a key play on India's entry into the global GH2 market following the government launching the National Hydrogen Mission. They are saying that while a lot of companies are talking about it, NTPC is already implementing GH2 projects with India's largest electrolyzer and a circular economy project. They believe 15% of the GH2 market could add about 15 rupees per share to the current price. So if NTPC were to capture 15% of the GH2 market, then that 15% capture could add 15 rupees to the current price, which is about 10-11%. So because it's already made this foray, CLSA is building a hypothesis that maybe NTPC could do XYZ, and therefore they could reach particular levels, which could add to the value on NTPC shares. So it's a steady stock, defensive of sorts. Who knows? These days, defensives might be in flavor. A bit of a mixed argument, but Never know, could react. So watch out for this one. Last but not the least, while everybody's worried about two things, which is what happens in Russia, Ukraine, which is a bit of an imponderable, as well as the rates, I thought the Morgan Stanley note has some interesting data. So they're saying that improved macro stability means that this time around, in the Asian region, that is, they say that this time around, quite unlike in the previous cycles, the Asian region can benefit from stronger growth in the US without being hurt by a more hawkish Fed. We know that the US growth is going gangbusters, and their point is that this time around could be different. In the previous cycles, India, the Asian stocks have been vulnerable. This time around, it might be mightily different. So let's see. Remember 2 or 3 days back, I got you a view from one more global brokerage about how in the periods of Fed rate hikes, in 3 to 6 months, the market is actually higher. So a lot of banks are actually writing that how the macro is different, plus the past data about what hikes do to equity markets per se, and it's not too bad. So maybe while the market is completely fearful about what's happened to rate hikes, and rightly so, yes, it might impact select pockets like IT, etc. Maybe markets might still be okay at the end of the year. Let's see. We'll get to know. Anyways, for now, take care. Stay safe. If you're stepping out, please stay masked up and be mindful. If you're trading, if you're a brave heart, then it might help to trade with stop losses. Thanks so much for tuning in today.